हेलो गाइस, वेलकम टू टुडेज वीडियो। एंड इन टुडेज वीडियो हम समझने वाले हैं कि व्हाट इज अ फ्लिप जोन। ओके, फ्लिप जोन इज नथिंग बट चेंज ऑफ कैरेक्टर, एंड हाउ टू आइडेंटिफाई चेंज ऑफ कैरेक्टर वी आर गोइंग टू लुक on it and try to understand how you can apply it during your technical analysis. Okay, so what is a flip zone? As the name suggests, flip zone means change in a trend या फिर जो प्रायर ट्रेंड था वो फ्लिप हो चुका है. Okay, so अगर bearish example लेता हूँ, if the previous trend of a market is a bearish trend, okay, and then at a particular POI or a liquidity sweep, market just flipped. That means the buyers took over the supply. Okay, that is our bearish flip zone. Okay, and vice versa for a bullish flip zone. So here there should be a POI or a liquidity sweep of a previous high, and then there should be a recent demand area. Okay, that recent demand area should be taken out by a supply or sellers with a good selling pressure, and then we'll take our entries at fair value gap imbalance or the bearish order block. Okay, that is the basic understanding of what is sweep zone. So let's see one of the example of how to identify and apply this flip zone in our markets. All right, as you can see in this particular example, there is nothing much to see, right? That means market is basically in a sideways trend, but no. So what happened here? Look at this. First of all, we had a breakout structure towards the upside. All right. So the breakout structure identified towards the upside, that means market is in a bearish trend. Okay. We are not going to touch upon the inducement and liquidity here, just identifying flip zone. So for that, I'm going to draw demand and supply areas. Okay. So this is our demand area, this is our demand area. Okay. So there are two types of entry. One is a risky entry and one is the safest entry. The safest entry is with multiple confirmations. Okay. So once the market tapped into our demand area, you can directly take your trade, but the only disadvantage of doing that is your stop loss will be huge, okay, as compared to your target. So that doesn't fit our risk to reward ratio criteria. So what we'll do is we'll look for multiple confirmations. So as we saw in previous rough example, how to identify a flip zone, first look for a recent breakout structure. So in this case, we had a breakout structure towards the downside. That means prices are making lower highs and lower lows. So here we this supply caused that break of structure. So this is where people will look for taking a short trade. Even essential traders will look for taking a short trade. Okay, but what happens? Market took out that supply area. Now who is in control? The buyers are in control. Okay, so this is our flip zone. We all can also call it as a change of character. Okay, so once you identify a change of character, look for a demand zone, or you can use Fibonacci tool for that. And with that Fibonacci tool, take your trade up on the golden ratio like this. You can see that this flip zone also become a breakers block. Okay, so you could have taken a trade from here. Okay, let us also see a sell example. Here only we have a break of structure, recent break of structure. Basically, this is where market took out a previous high, or can also say that it came near to the supply area and then show us a sign of a reversal. In this case, we didn't touch that supply area, but for an example sake, we are just doing it. Okay, so we have a breakout structure here, and this demand caused that breakout structure. As you can see, markets the price sometimes create liquidity below those areas so that retailers can buy there and place the stop loss just below that. And as you can see, the supply overpowered that demand zone and we flip that zone. Okay, so that is our change of character. So this demand, sorry, this supply caused that change of character and we could have taken a trade from there. Okay, and as you can see, our risk or ratio is way smaller as compared to the risky trade. Okay, and then you can target according to your strategy. 1:1, 1:2, 1:3. We always prefer 1:3, correct? And then you can simply follow the order flow of the market. Okay. Again, here we have a recent break of structure. So in this case, this supply cross this break of structure. Okay. So let's say when the market opens and we broke above this supply area. So this zone will be our flip zone. All right. And then we could take entries from those zones right there. Okay. So this was the example of XZX Nifty. If I want to show you something on Nifty 50, okay. So here also you can see we have a demand zone. Market came inside that demand zone. This was that supply area which caused that break of structure. Market flipped that supply and then we followed the or bullish order flow. Again, we have a flip zone, a decent breakout structure here. Then the supply caused that breakout structure. Then market flipped that structure, and we followed the bullish order flow. Okay, so flip zone is to identify a potential reversal of price. Okay, but how to increase your confidence? First of all, it is necessary to identify a higher time frame structure of a market. Okay. Second thing, your supply and demand zone, and to add one more confluence, look for premium and discounted prices. So once prices tap into premium zone, if you are looking for sell trades, okay, look for areas where there is old highs and lows. Okay, so in this case we have a liquidity sweep here. All right, so this is how you identify flip zone. All right, so thank you so much for watching. If you like this video, please hit that like button and make sure you subscribe to my channel. See you next time.